Good morning, ladies and gentlemen. I'm going to take you for financial accounting 3A during this lockdown. My name is Nyamaza Wellington, and I'm also known as a professor. I'm the one who paid this, and I'm conducted on those details. Right, I just want to take you through consolidation of partial owned subsidiaries in volume 1 of BAC or BACC 204 ZOU module, right? Unit 3. So this is the first presentation of Unit 3, right? Consolidation procedures. Let's go to example 3.1 examples, and it's H Limited purchased 75% shares in S Limited for 150,000 on 1 January 2011. The summarized financial statement of financial position of S Limited on that date was as follows. Right, we are given our assets and our share capital and current liabilities. Right, what is required? Show the analysis of S Ltd equity as at 1 January 2011. So we just want to show the analysis of equity. Let's notebooks, right? Let's draw this column and leave the gap here to put the narrations here. Right, that's analysis of H Limited equity in S Limited. Right, some books will be written analysis of shareholders equity in S Limited. So instead of putting shareholder, just put H Limited to be precise. All right, what you analyze is the equity of what? Of H in S Limited. Right, put this column 100% total, then 75% for H Limited, NCI 25%. Right, under H Limited, let's have these three columns at acquisition, right, and since acquisition. And under since acquisition, let's have general reserve and retained earnings. This is for easier calculations, you'll see it later. Right, yeah, right, just was the same information I gave you below. Then we want to start our presentation here on this analysis of equity. Right, we just put our $sign there. Then we write at acquisition. What happens at acquisition, right? Or the net what? Equity, and we are analyzing it, the net equity at what? At acquisition, which is the same as what? As net assets, right? Share capital of 100,000, share premium 40,000, general reserve 25,000, retained earnings 15,000. So there's no additional information like my revaluations or the undervaluations, because this assets at this date will be recorded at fair values, right? So we can make some adjustments for fair value adjustments, right? So the total is 180. Then for H Limited here at acquisition, we just want to put it the share of what? Of H Limited. For share capital 100,000, 75% of 100,000, you get what? 75. Then for NCI it's 25. Then share premium 30, NCI 10. Then general reserve 18.75. Then for NCI 6250, then you put 75% for retained earnings here and 25%. Then you put our totals, right? Right, this is the net assets. These are the net assets, and we've shared against the controlling interest and the non-controlling interest, right? Right, so we just analyze, did we bargain or we paid for some extra things, from some extra assets that were not seen out of our participate? So that is what we term what? Goodwill. So what was our consideration like? Right, it's consideration and NCI. So we put the consideration here and put the NCI here. For the consideration, we are given it as what? As 150. Then NCI, we are not given the fair value. NCI is measured using what? The partial goodwill method. So it is not going to have any goodwill. So it is going to be recorded at what? At net proportionate of its what? Of assets here. Net assets, these are the net assets, and the share of NCI is 25%. 25% of a 180, which is 45. So we recorded it at 45, right? Then as you can see, at acquisition, the portion we acquired was 135, but we paid it for what, for 150. So it means we paid for somewhat, for some extra assets, maybe invisible. So that is what you call what goodwill. The asset will be maybe something like very vibrant stuff and very good systems that will be paying for, right? That's the 15,000. So this will be the equity what represented by what, by goodwill, right? That is to this analysis of what, of equity. That is the what, the end. Very much. Feel free to contact me for any further inquiries, right?